everyone, Joe Vitale, Vitale Wealth Management, here with this week's Grading Investments Market Update. All information together as of the week of October 6th. Sorry I missed you last week. We had a little travel, a little different things going on. Let's talk about what happened, the week in review. Major U.S. indexes ended the week higher despite the government shutdown entering its third day on Friday. NASDAQ was up 1.33%, S&P and Dow each advanced 1.11% for the week. International equities also posted strong gains, outperforming their U.S. counterparts. Developed markets rose 2.73 and emerging markets up 3.68. One of the things we're talking about is our G40I portfolio, or international. We're waiting to see that's coming back really strong, 25% year to date. So definitely nice to have a little piece of that right now. Also, gold extended its winning streak to 7 consecutive weeks, adding nearly 3%. Bitcoin surged 11%. Gold is over 4,000 an ounce for the very first time. Bitcoin is over 125,000 per coin. So yes, we have those in our portfolios if you'd like to. We have those available. But a little scary, a little volatile, but it's out there. So let's talk about the jobs report, originally scheduled for the release on Friday, but it is postponed because of the shutdown, which the market likes to see the job reports to see how it's going to affect the economy. However, the job reports are always being, redone. They're always being, we're going to amend it. That was wrong data. I don't know how they keep getting that information wrong. So does it really matter? It really does, but we should get an idea of it. We are seeing a little softening. Talk about the upcoming economic release. This week's key economic data includes insights on trade, consumer confidence with the Fed interest rate decision from the September meeting. Yesterday, the trade balance was released, providing more insights to U.S. trade. Today, the Fed releases its minutes from September 16th and 17th meeting, providing more details on the interest rate decision. And on Friday, this Friday, the Consumer Sentiment Report will provide information on the health of the U.S. consumer. The federal government report could be delayed or canceled, pending the resolution of the U.S. government shutdown. That began on October 1st, and of course, is still in negotiations. Pending the outcome, we don't know when that's going to happen. So we are waiting on data on that. We're starting to see the housing market a little bit softer. We're seeing that happen as well. Hopefully the interest rates start coming down, which will help the employment, which will also help the jobs market. That's what we're looking forward to. Should have happened already, but we'll see how that goes. Talk about the market outlook. The U.S. stock markets wrapped up both September and the third quarter on a strong note, with the S&P gaining 3.5% for the month and 7.8% for the quarter. Historically, September has been the weakest month of the year for equities, but it was pretty strong this year. So this is making this year's positive performance a reminder that investment decisions should be driven solely on pattern. A lot of people are like, it's going to go up, it's going to go down. Or a lot of people say, it's the fourth quarter. Actually, the fourth quarter is good for the market. We've always had pretty decent fourth quarters. So last week, Congress failed to pass a necessary appropriations bill to fund the federal operations, leading to a government shutdown, as we discussed. As shown in the chart, if you get on the email, you'll see a chart. The past shutdowns have not necessarily meant bad news for the stock market, as they tend to be relatively short-lived. We have seen them go to 60 days, but it doesn't really affect the market that bad. Now, despite the political gridlock, stocks managed to gain, with all the major U.S. indexes reaching new all-time highs last week, which is very good. And however, fiscal concerns pushed investors toward the perceived safety, sending gold and Bitcoin to all-time highs. Actually, the dollar is also weakening this year. We've seen the dollar weaken, which is also driving up gold and Bitcoin. The shutdown also delayed key economic releases, which we're waiting for, including the jobs report, which we talked about, and raised concerns about the mass layoffs across the federal workforce, which we're never really happy about that. We don't want to see it. We're happy when we see government spending cut. We're spending when they cut programs that don't make sense, or when they're really, waste of money. We don't want our money wasted, but definitely don't want to see our workforce, our good people who are working for the government, let go. Now, recent activity, there was trade activity in the laddered income strategy. We sold off the IBTF, BSCP, BSJP, which doesn't mean anything to you. Those are ETFs, and they bought IBTK, BSJU, and NYCJ. So basically just rebalancing that portfolio. We're starting to see the laddered income, fixed income go a little higher. Our fixed income's 5.6% year to date because interest rates down, values go up. Let's talk about stocks in the news. AstraZeneca, which is owned in the G40I, is a European pharmaceutical company signed a $555 million AI deal with San Francisco-based biotech company to develop genealogical editing therapies. Shares gained 15.8% for the week, so that's pretty strong. Also, TMO, which is Thermo Fisher, joined in the contrarian choice. Thermo Fisher jumped 17.59% last week after securing $1 billion manufacturing agreement with biotechnology firm Vaxcyte and announced a new AI-focused partnership. Again, very good. So we're starting to see the contrarian choice portfolio, which has kind of been lackluster the last year or so. They're starting to do a little bit better. We're still the hubbub we still should start seeing our G33, which is our small cap portfolio, do a little bit better. It is doing better, but it's still lagging. So we're looking for where the best place is. Make sure you give us a call. We're always rebalancing and making sure we got you in the right position. So that's it for this week. Thank you so much for being part of the Vitale Wealth family. If you'd like to get a hold of us, you know the number, 855-756-5700. Give us a call or visit us at vitalewealth.com. Remember, end of year is coming. If we still have time to do some Roth conversions before the end of the year, maximize your tax bracket. If we've got some room, and take advantage of these low tax bracket environments. That's it for this week. God bless you. We'll see you again next week.